to understand your perspective on the entire supply chain, how you're implementing IoT, the challenges on the financing side for the sericulture farms. I would love to hear your views on that.
So let me give you a little bit of brief of, if I just delve into a simple textile supply chain and just natural fibers, right? Not man-made fibers. There's a farmer, there's a yarn manufacturer, there's a fabric manufacturer, and then the retailer, and then the consumer, right? Now, when we looked at the supply chain, we saw most players going at the last fabric to retailer leg. What we thought is that if you actually want to solve for quality, we have to go all the way back to the farmer, right? Which is how we started the silk business as well. Today, as on date, we will have close to 75,000 silk farmers with us who are working actively with us. And what's happened is we have two kind of IoT devices, right, that sort of help the farmer. Now, where Mr. Timmana had added a lot of very, very valuable points, we had a slightly different objective because, of course, we were not fintech first, right? Fintech has always acted as an enablement for ReshaMandi.
Some innovative solutions on agri funding, on agri finance.
Yeah, I'll pick that up. I think, Kshitij, I think you don't have to worry. This is music to the ears of the government and the public sector banks, Gramina banks, and 65,000 packs are out there to distribute money. There are big balance sheet banks, and FM has called out that 20 trillion, 20 lakh crore is mandated. It is a distribution business. It is not a credit business anymore. It has to be given to the farmer. And 120 million farmers, including marginal, small, and all the your self-rearing farmers, have been covered very well. It is just that there is money available, and there is a borrower, there is a lender. That's where the fintech comes in. I have studied this market for last 3 years, and I've been trying to talk to ReshaMandi also sometimes, saying that everything that you do, whether it's a product or service or anything which you want to change the behavior, the first thing the farmer will pop up, where is the money? I need the money. You want to give me an equipment? Give me an equipment, fund it. You want to add a service where I have to pay for it? Where is the money? That simplest money is available under Kisan credit card. Like up to 1.6 lakhs, non-mortgageable, just what are you doing with it? And hypothecate the stocks of the crop or whatever, what are you growing, and including dairy and fisheries, poultry, all of that. 1.6 lakh to 3 lakh is called, mandated, where interest subvention is available by the state and central government. Your net rate is 4%, whereas you might be paying 4% per month to the mandis, you will get 4% net rate for the per annum simple rate, right? That achievement of that target is 70-80%, and it's a headache for the government. If there is a headache for the government, headache for you, but what's happening? The fintechs have to money of 1 lakh average ticket size of say 70-80 million farmers was costing the bank at anywhere between 3,000 to 5,000 rupees per file. That means the product makes the loss at the operational level, not at the interest level or credit cost level, right? We said, I think Praveen is aware of this segment. We said we can do it at 1/10 of the cost. It doesn't take 3 weeks, 5 weeks, or 3 months. It takes few minutes to do that. How did you do that? We brought the whole thing digital. We didn't digitize the processes. We went digital direct. Because today, what is the infra that is made available by the government, whether it's a KYC, bank, your bureau access, your land record access, satellite data access, everything can be done in 2-3 minutes at the 1/10 of the cost, 1/20th of the cost, right? So this is readily available, and it's just that you have to access it. You should not be, just going to the NBFC. That'll add up another 10-12% arbitrage for risk taking. NBFCs are not good risk takers. For risk taking, you need two things. One is a mandate, like government mandate. Second is you need a big balance sheet. If you don't have the balance sheet, you can't take the risk. To take a risk, you have to broad base because there are always a 5-10% of operational default which will happen, and write-offs of 2-3% will happen. The big balance sheet banks like 12 public sector banks, 45 Gramina banks, and 65,000 cooperatives, packs will definitely step in. What is needed is fintech technology to bring the books and bring the borrower together. And agri-tech companies should join the fintechs and the banks. That's why I call it as agri-fintech, Now then there is a need for agri-fintech as well as green finance or green fintech.
Madhur, you want to chime in on validation of practices across smallholder farmers, and what are the differences between Asia and Africa, and specifically from an India perspective?
So I think if we start with what's the difference between the two continents, and if we compare India and Kenya more specifically, so see, if you look at regenerative ag practices and climate finance, I think as a concept, this is something which has been propagated in India a lot more, right? Because the Indian government and the entire extension system has also been focusing upon this topic for more than a decade now, because our soil health quality is also deteriorating drastically, right? And if you see what the differences in the soil organic carbon content and the soil health overall in the last 2.5, 3 decades, I mean, it's drastically gone down, right? So Indian government has been advocating not so much from the climate perspective so far, but more from the soil health perspective and the soil fertility and the food security at large. And so when you go to the farmers and talk about regenerative agricultural practices or this natural farming, sustainable farming practices, I think it's easier to sort of connect the dots for them, at least in some of the geographies in India, right? But the concept happens to be like pretty novel when we look at East Africa. That's one. And also, I think agriculture has not become so intensive in nature in these countries, in African countries, that you need to go back to regenerative agriculture, to be honest, right? They are yet to reach the optimum quantity of fertilizer that needs to be put in, etc., etc. And so I think the kind of interventions that we see from climate finance and soil carbon sequestration are quite different between the two continents, right? But I think the potential remains the same. Interventions might be different, but the potential is humongous in both the countries and the continents at large. And in terms of validation of these practices, so we use different methods for that. So in some cases, it's IoT-based systems, which helps us monitor that how much water, etc., has been put up into that farm or in that particular area. That's one parameter. And then for a lot of the other practices, we use remote sensing-based algorithms. And for that, we have an in-house team which develops them. And so that is how the validation is done for different set of regenerative practices, which are of interest to us at this point in time, and for the crops that we are most keen on to start with.
So how, a quick question, how easy or difficult is it to implement technology in the farming segment? Are they easy adoption rates there, or what are the challenges that you face?
Yeah, so see, definitely it's challenging given anything new which gets introduced in an ecosystem, right? And especially in a smallholder ecosystem, definitely challenging. Not one is the education part of it, like literally sort of creating an agency as to why one should do it in the first place without harming their crop yields, because I think that's what matters the most. So I think building the education, doing the demonstration and showing success that it doesn't harm their primary business is the first part, right? So really encouraging them and making them confident about following these practices. And the second one is that how do you create linkages for providing the right set of machineries to do those practices on the ground, providing the right set of input. So how do you create those linkages on the market side? That's the second one. And then the third part is that if someone is willing to sort of try out some of these new practices, new machineries and mechanisms, how do you make the financing available for that? Right? So I think in a lot of ways, when we talk about green bonds, climate financing, carbon credits, right? So they become a really critical element or instrument to catalyze and improve farming practices, which are much more sustainable in nature. Because it's definitely challenging, and considering the scale at which India operates, right? So there is a huge need of making green capital at reduced or subsidized rates, making that available, and then helping farmers transition to these practices rather than just education or extension.